Welcome on YouTube, and it's your boy Latin YQ, Latin FX. You know, don't mind the nice shit again. But yeah, what's up? Fix this. Yeah, what's on? What's going on? Today, I teach you guys my strategy that I trade, right? Today, I'm gonna teach you how I trade supply and demand. Full breakdown on my strategy that I trade and things that I look for and how I enter the market to catch these. You know, you can catch these nice, beautiful moves in the market, right? So let's go. By now, I believe everybody should know supply and demand. Supply and demand is like a quick breakdown. Supply and demand is, when you have a supply, market sell. When in a supply, market sell. When in a demand, market buy. So supply mean market price is going down, and demand just mean vice versa, price is going up. So when in a demand market, price is going up, when in a supply market, price is going down. So let me just give you like an uptrend example. So in uptrend, we're making higher highs and higher lows, right? In uptrend, making higher highs and higher lows. So in uptrend, when you have an uptrend, right? When you have an uptrend, you're looking for buys, right? And in an uptrend, you're looking for buys. So in an uptrend, you're gonna look for demand zone. So in this case right here, watch this. So we have uptrend, we have higher highs and higher lows. Let me try to get this thing right there. Higher high, right there again. Higher high, HL, higher low. So here I move this. You all seen it? Yeah, it show. Yeah, higher low, higher low. Make that higher low, yeah. And that's it. Right there. Higher low. Alright? So in an uptrend, you have higher highs and higher lows. So in an uptrend, you're going to look for a demand zone, right? You're going to look for a demand zone, you're going to look for a buy. So in this case right here, you have a uptrend, so you have a breaker structure. After you got a breaker structure, right? After a breaker structure, you're going to look for price to pull back, right? To pull back and come to a demand zone right there, right? Right there. So the demand zone is gonna be like right there. So this, so for example, we're gonna 1 hour time frame, right? And 1 hour time frame, so that's gonna be a 1H DZ. So that's gonna be a 1 hour demand zone. And when you mark this demand zone, you're gonna wait for price to give you a pullback to come back to test this open demand zone. For it to be a valid demand zone, you're gonna have to get a fair value gap. You can get some type of liquidity or inducement. Basically the same thing, but yeah, so either inducement or liquidity, and make sure you got a valid unmitigated fair value gap with a unmitigated demand zone. So price pull back to the demand zone, and then you're gonna look for an entry. But you're not gonna just look for an entry because price pull back to the zone, right? You're gonna have to get some confirmation if you're on a higher time frame. Is it? So if you're on a 1 hour time frame, you're gonna jump down to the 15-minute or the 5-minute base and which time frame you guys trade. Me mostly look for entry like on the 15-minute. Sometimes I look for it on the 5-minute. Alright, so you're gonna look for an entry on the 15-minute and a lower time frame. So you get a sniper entry. But I'll do this now. So price break structure again. So price coming in, right? And we miss this. Price goes up, boom, break this higher high. Right? Break this higher high and give you a breaker structure. What we're gonna do now, we're gonna mark out this open demand zone right here. Alright. We have fair value gap right here, so we got a right here, so I'm just draw the line right here, so I'm just put I have a FVG right there. You see me? And so you have some form of liquidity right here too. So I'm gonna put like, Kanga gonna make, Kanga gonna do what Kanga do. So we have some form of liquidity above the FVG there, so we're gonna go and put this, put a dollar sign. Right, yes, let's just do that as an example to show you like how we can break them. Alright? What we're gonna do now, after we do that, we're gonna wait for price now to retrace back into this demand zone, in this 1 hour demand zone, right? And put it right there. 1HDZ. So we're gonna wait for price to give you a retrace back to this 1 hour demand zone right here. So price gonna do, price now go just boom come down in night and boom go up, price gonna give you this little movement coming down, like, especially on a lower time frame. You see me? Price gonna just do the thing and then it come down here, so right? You see it? Just, yeah, it ugly. Let's train it up like that. But say, yeah, price gonna do its thing, right? Price gonna do its thing, alright? So price retrace back on the 1 hour, or you can even go on the 15 minute and look at the price, because sometimes, on the lower time frame in the retracement, you can get a counter trade and find a trade within this pullback to the demand zone. But otherwise, we not really look on that. We just look on, buying with the market. Let's go with the market. So I'm just delete this and make it look straight. So boom, so price pull back now. Price pull back to the demand zone. Right? We're going to a 15 minute now. We're going to the 15 minute or the 5 minute time frame. We're going to look for something like this. Even this is a continuation trade, is me. But so we're going to look for something like this, right? Because sometimes we got these liquidity right here. So liquidity is in here and price. Prices sometimes come down and sweep out these liquidity right here, right? Sweep out this low right here and come back to this zone, test this zone again. But surprise sweep out this liquidity right here, right? Whatever liquidity you got right here, either double bottom or some pattern liquidity right there. Surprise do that. We go down to the 15 minute, right? We're gonna look for something like this. Price gonna make a lower high, right? Try to farm. We're gonna look for like a pattern like this on the 15 minute, right? Try to farm a lower low, but fail to farm a lower low. Make a double bottom pattern, but it break this lower high that you farm on the 15 minute time frame. Let me change this color so we can have this as a 15 minutes. I'm gonna put it in red. So already it's 15 minutes, right? So price break that red, right? Break this lower high right there and give you a market structure shift on the 15 minute. So price give you this market structure shift on the 15 minute, right? We're gonna look for something like this. We're gonna mark out the 15 minute demand zone right there. Right? Mark out the 15 minute demand zone right there. So we mark out the 15 minute demand zone now. What we're gonna do? We're gonna wait for price. We're gonna wait for price to pull back into this. Really. We're gonna wait for price to pull back to the 15 minute demand zone. So 15 minute DZ. Alright. So we're gonna wait for price to pull back to the 15 minute demand zone. And we're gonna wait for price to do its thing. Push come back. Boom. In the demand zone, right? And then we're gonna wait for a candlestick pattern. So either we can get a doji candle engulf, why you get a doji candle rejection. You get a doji candle, then you get an engulfing candle. So say yeah, market is gonna go up, or you can just get a candle, engulfing candle pattern that just engulf any candle, any red candle beside. You gotta get you get what I'm saying? If you get what I'm saying, they're just looking for a candlestick pattern. So you can look for doji candlestick pattern or engulfing candlestick pattern or pin bar candlestick pattern, right? You can combine the doji candlestick with the engulfing candlestick, because we know when we get a doji candlestick, the market is in basically a consolidation phase where the market don't know if you want to buy or want to sell. So if you get a doji candlestick, you can wait for an engulfing candle that engulf that doji candle, then you know that it's a strong buy signal. So say price enter this 15-minute demand zone, right? I will get a doji candle. Get a doji candle now, and we go so boom. And we go for a long position, right? And we say doji candle goes right at the top, so and we enter the market. Right there, stop loss below that low. Our take profit and nice 1 to 3. I can target a open supply zone in this case, or I can just target a high. So we target that high, right? And boom, price goes so you get the engulfing candlestick now, and price boom, just push up and price do its thing. Sometimes price will just go boom and go one door, or price will just do its thing, and you know, I just do like a price action thing until price boom, it take profit. Sometimes price just goes so boom and give a trade can go based on the pair where you trade and how fast the market momentum going at that time. You see me? So yeah, and for downtrend it's just vice versa. Let me see if I can flip the chart. How you flip the chart again? Yeah, I don't know if you flip the chart. But yeah, for downtrend it's just a vice versa thing. I do a downtrend now, so I hope you guys understand this like a time frame, like a market structure thing that I do right there. Oops. So let me go back over it. So we have an uptrend. So in an uptrend you're gonna look for buys, right? You're gonna look for buys. So you're gonna look for a breaker structure and price. Break that structure, break that higher high to form a next higher high. You're gonna look for price to retrace to the demand zone. When price retrace to the demand zone, you're gonna look for an entry on a smaller time frame, either a 5-minute or a 15-minute time frame. If market, you just get a market structure, right? You just get a market structure shift. So you know when I get a market structure shift, you're gonna wait for price to pull back to the demand zone and look for an entry confirmation. Alright? And most of the time you gotta look out for liquidities. But liquidity is a thing that price we just sweep liquidity, tap you out, and then price go your way. So price just comes, you have a stop loss below this low, and price just come sweep out at the stop loss there, and then boom, go the other way, because liquidity is just lying right below it. So something got to look out for like a double bottom or a triple bottom, or some form of pattern that leave liquidity underneath where the normal is at a stop loss. So you got to look out for liquidity, or just wait for price to sweep liquidity, then I look for an entry and price go up. So let me just delete all of them things. You see me? You see it? And then let's get a run through upon the downtrend, right? Sorry for me, Musa. But yeah, hope you guys understand that uptrend example. So I'm going to the charts and show you like a few trades, a few markups that I do. Isn't me? So let's go for a downtrend now. Quick, me I go trade. You know, downtrend. Start. Lower low, lower high, lower low, lower high, lower low, lower high, lower low. Well, it's not the greatest markup, but it's a markup. Alright? Boom, 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 bless. Alright. So you know, in a downtrend, we're looking for sales. So we're looking for price to go to supply zones, right? So when you're looking for price to go to the supply zone, you're gonna look for sales. You're gonna look for market price to drop down, right? So what we do, we mark out the low and the lower highs. Alright? Maybe some pretty few of them this time, but yeah. You guys get the gist right. Lower highs and lower lows. So lower low, lower high, lower low, lower high, lower low, lower high, lower low. Alright, you get the gist for that. Alright. So this is price action, price market structure, you know. So those prices in a downtrend, so price is making lower low. So price is breaking structure to the downside. So you have a breaker structure right there. Our next breaker structure right there. Is and you have a next breaker structure right here. You see it. So yeah. So breaker structure. So when you get breaker structure, looking for price to retrace back to the supply zone right here. Some supply zone will be right there. You're looking for price to retrace back to the supply zone right there, that they are right there. So they say we're in the 1 hour time frame as usual. Looking for the 1H supply zone. So price retrace to that 1 hour supply zone, and when price retrace to that 1 hour supply zone, what we're looking for? Sells. So we're gonna look for an entry right there. When price enter, right, they get on a 15-minute time frame. You get a 15-minute time frame, right? And we go say boom, 15-minute. Price is just making this. Oh shit. Alright, I'm gonna back over that. So price just give a market structure shift, retrace 15-minute time frame, and now price and make a lower highs, lower highs, lower. And get the market structure shift and get the re-entry. And so right there would be a market structure shift, the re-entry right there. And but I did the rest so you can see it better. So alright then, boom, as before then, we know it's a price retrace, but that we're gonna use, this a second one here. If you do the example with the entry on the 15 minutes, you see me? So boom, price break structure again, say you figure you missed that the one day. You get this a 1 hour zone right there. So again, 1H supply zone. And you know when price break, retest this zone right there, and then come break a structure, you get this right there. So again, a 1 hour zone right there. So you see me? 1H supply zone. So when price get at the 1 hour supply zone, you know, we're gonna look for. You can either stay on the 1 hour time frame or go on the 15-minute time frame and wait for price action to pull back to this 1 hour zone. But say boom, price pull back to it, to 1 hour zone. You go down to the 15-minute now. And the 15-minute, you know, price and make it lower, higher highs and higher lows. And the 15-minute, when you go say boom now, you know, so the candle here. What I'm gonna do, I'm gonna explain it better then. I do some. So we go boom, we go up on the 15-minute time frame, right? Or if we pull back on the 15-minute time frame, price goes up boom. Price goes up boom and make it higher highs and the higher lows them. Higher highs, higher lows, higher highs, higher survey. I'm gonna jump the one. Higher high. Right? Higher lows, higher high. Higher lows on the 15-minute, right? Price doing that. I change the color back to black. So yeah, this is the 15-minute time frame right there. So price making a pull back on the 15-minute, making higher highs and higher lows. So what we're gonna look for in the 15-minute now, we're gonna look for price to come down, break this lower high right there, break this lower high right there, right? Let the price break this lower high. We're gonna call that a market structure shift right there. Get a market structure shift on the 15-minute. When you get a market structure shift on the 15-minute, obviously we do, we wait for price. We're gonna mark out the 15-minute supply zone. So 15-minute supply zone. mark out a 15-minute supply zone. And when you get that 15-minute supply zone, what we're gonna do, we're gonna wait for price to pull back to the 15-minute supply zone. Then we're gonna look for an entry candlestick pattern right here, and then we're gonna sell off. We're gonna sell short right off there, stop loss above that eye right there. Target a 1 to 2, 1 to 3. This the ratio, and yeah, it's as simple as that. You know, so overview, break a structure coming down to the downside, break the structure price, pull back up 15-minute time frame, come jump from the 1 hour to the 15-minute time frame, watch price action. You're gonna wait, and when price react to the 1 hour supply zone, what we're gonna do, go down to the 15-minute and wait for 15-minute market structure shift. And get a 15-minute market structure shift, we'll mark out the 15-minute supply zone that causes the market structure shift. And then when price pull back to that 15-minute zone, we're gonna wait for a candlestick entry. When we get a candlestick entry, we're gonna sell, stop loss above eyes, clear liquidity just in case price wanna pull back, and sweep liquidity. We just clear that liquidity, so stop loss above eyes, and then we can target a 1 to 2, 1 to 3 restore ratio. So yeah, this long overdue, you know. Let's just go to the time frame them, you know, the live market, and show you a few examples, few markups that I did. Alright. Oopsie daisy. You see? So alright then. We go to the 1 hour time frame. Show you. So right there, so now, as you can see, alright. See if we can get a better price. Ow. No. 1 hour. 1 hour it is. 1 hour. As you can see right there, so right? Price was in a downtrend over here, so right? Price was in a downtrend over here, so. So price been a make lower highs. Wait something. Price been a make lower highs, lower lows, lower highs. Feel for make a lower low, give you a higher high, but boom, come down, give you a lower low, right? Price give you a lower low, right? Let me change the color to black, right? Price give you a price break structure right there, and then it come back down, a break structure right there. You see me? In that case now, so what price there now? Price have this extreme low down here, our price now. Price go up, give you a higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, and give you a higher high right up here. You see me? Price give you a higher high, so market, sorry for that. Market structure shift right around here. If we check his stats and already display lower high, lower low, lower low, lower low, lower high, lower low, and market structure shift happening right around here. You see me? The market structure shift happening right around here. See? The market structure shift on the 1 hour happen right around here. And right we have right here, delete these so you can get a clear view of a mirror. Just a break and then go up to the live chart up there, so you see me? So we get a market structure shift right there. So we have a breaker structure right there. With the smallest breaker structure over here, so you can get a view of them. You see me? We get a 1 hour market structure shift right here. And we just check the stats now, but we have right there, so we have a supply zone right there, so that price reactor, but yet we have a supply zone right here, so you see me? So we have a 1 hour demand, not supply, sorry, demand zone. 1 hour demand zone right there, and we have one right there, right? So what that do now, we have that 1 hour's demand zone right there, so price come and test this one, price didn't come and test this one, even though we got FVG right here, sir. Open FVG right there. Good FVG, good. Fair value gap right. So we have liquidity right there, so too. So we have everything that's in line right there, sir. But price didn't come to retest. Don't you, sir? Price come test. This is zone right here. Price test this 1 hour zone right there. Have a FVG. Price test it. Price buy. Go up right. Broke a structure again. Break structure right there again. Break a structure right there again. Alright, and then boom, break a structure right there again. Alright, price break structure right there so again. Alright, and when price break structure normally we can take out the fib tool. When you take out the fib tool, you make sure say you're in line with the highs and the lows, and the highs and the lows. You see me? And the highs and the lows. Price come down into discount. So normally is we don't have this 78% and 88% level as the entry, as the key zone, right? As the key zone for the entry, but other terms is price was in premium, now price come under discount, right? Price come under discount. In discount now, in price come under discount, you're looking for buys, right? And when price is in premium, you're looking for sales. So price come under discount, right? After a break structure, you have this 1 hour. As I see, me have a 15 minute, I have a bank, I was on the 15-minute time frame. But right there is a consolidation, a rally, base rally. So it's a continuation pattern for the buy. I'll go up on the 15-minute and show you. I might delete this because I'm not really understand that right now. I'm not going to explain that too. But yeah, on the 15-minute, there's a serial price to right here. So break structure right here, right? Consolidate, come on price. Break structure, rally. So price give you a rally base, right? So this is a continuation pattern in supply and demand. So this is a continuation demand pattern, right? So you have a rally, you have a base where price consolidate, and then you have a rally again. Now what you're gonna do when you get this pattern, you're gonna wait, you're gonna mark out the demand zone and wait for price to retest it. So what we do? Mark out the demand zone and wait for price to do its price action thing, which you could have looked for sales right after, but we didn't. Because break a structure, price come back to this zone right here, boom, sell. But yeah, what we do now, what we see this price give you a rally base rally, we mark out this zone right there, and price come boom, retrace to this zone, and then they're gonna get these candles. So what me say now, we don't normally look for either a doji candle or a pin bar candle. Not pin bar, yeah, pin bar is about the doji or engulfing candle stick, right? So even right here, so now on the 15-minute time frame, you see these rejection candle right here. See this pin bar candle right here, and you see this pin bar candle right here. This pin bar candle basically get engulfed, but when you get engulfed, you get back an engulfing candle to the downside, and then we basically get this inside bar candle right here, so because it closed inside of this doji candle, so this is an inside bar candle right there, which alright, just I'm gonna take the entry right off of this inside bar candle, is it? But otherwise, as I said, doji, if you want to wait for more confirmation, you can take an entry right up here. You're gonna move the stop loss, come right there, so you get this doji candle right there, so big, nice, juicy candle right there. You enter right off of that the candle right there, and you can target this eye. I just see target right there. So price just push up, give you a few pullbacks and push up, and you get a nice 1 to 3, almost 1 to 4 risk reward right there, so. And price break structure again, and what we do, we mark out this 15-minute demand zone, right? But we mark out this 15-minute demand zone, price do this thing and pull back. Remember me I tell you about the liquidity thing. Alright, boom, now price price pull back. As your price pull back, price giving you these candle, you get big engulfing candle, price come back, pushed down, test in this zone. But on a 15-minute time frame, your price do making lower lows, lower highs, lower low, lower high, lower low, break structure, lower low, price lower high right there. So price give you a market structure shift right there, right? Market structure shift right there, and you do you mark out the 15-minute demand zone. Fear for the gap open, liquidity right up here, price sweep that liquidity right there, and come back down, test doji candle, engulfing, not doji, engulfing. We get two doji candle after though. You get this nice engulfing candle right there, and you enter right after the engulfing. You get two doji candle right there. You see this? Two doji candle and get an engulfing. So all if you miss is an entry right there. Right there, sir. That'll be a nice entry too. You do it a late, but it'll be a nice entry. And you can tighten your stop loss a bit more. Stop loss below this, sir. But where we entry there now is right there. What? Yeah. Our entry is right after this engulfing candle right there. Boom. Engulfing candle. Stop loss below this, so just in case price won't come back. Even though we know price now probably now come back, because sweep is a liquidity right out there already. What are this liquidity? So basically a double bottom. Price sweep this liquidity right there. Going up, come back down. Retest and buy. And this one is still going 1 to 3.8. And yeah, TP some smash. So that's it. Easy technique. It just gotta take time to, and it's a long, sometimes it's a waiting game in where you have to really sit down and wait for price to come to you instead of you go to the price, isn't it? And me personally, I tell you say, yo, supply and demand is a good strategy. It just take time and you have to focus on it and really want to do it. So you can do some more research on it coming over, probably explain it the best, or because we get used to it, teaching thing, so we probably not explain it the best in terms where you probably don't understand it better. But you can do your research and watch a lot of people who do it, you see me, and you can just put tools and tools together and get an understanding. If you understand market structure, breaker structure, and them thing there, it's easy for you. So from you can spot a breaker structure and spot a market structure shift, it's easy for you to find a demand or a supply zone. Otherwise I can call them order blocks too, you see me? So yeah, hope you enjoy, hope you like, comment, share and subscribe for more. Hopefully we can reach 10k subscribers by the year done, and I can inspire a lot of people to start trading. I'm gonna get better at this teaching thing, but it's a boy, lad in our mouth. Peace.